I'm Ashley Martella for Newsmax TV Money. Stocks have been on a decline, falling more than 12% since the beginning of the year. Meanwhile, traditional inflation hedges like gold and even food have skyrocketed. Oil flew past $143 a barrel. Investors are getting lots of mixed signals and tough times could be ahead. So I'm joined today by David Frazier, editor of the ETF Strategist, to talk about the market's recent big swing downward. David, it's good to see you.
Nice to see you, Ashley.
Talk first about some stocks here. A lot of money managers say that we're near a bottom. What's your take on that? Is that true?
Well, we could be near a bottom. I think what we'll probably see this week is some consolidation in the overall market averages. However, we're at risk of trading significantly lower.
Now, clearly investors have been buying assets to hedge against inflation, like gold and oil. Do you think that'll continue?
Over the near term, I think it will. I think what we'll likely see over the next couple of months, we'll have latecomers enter into the commodities market. When I mean latecomers, I mean individual investors like your Uncle Joe or your Aunt Mary, if you will. Folks that turn on the TV and hear about how commodity prices are soaring and think that, gee, I need to get in on that. So as these players come into the market, there's a good chance that oil, gold, and various other commodities will scream significantly higher. However, I think later this year, we'll likely see those commodity prices collapse.
Federal Reserve stayed steady at their last meeting, although some on the Fed have publicly warned that U.S. inflation is at a serious risk. How big a problem could this be, and what is the solution?
Well, it's on a long-term basis. I think it's going to be a problem for several years. What we have essentially is what is referred to as cost-push inflation, and we're referring to a big increase in demand for all types of goods and services from China, India, other emerging economies. So when you have the demand for a particular good that may be in limited supply increase, obviously the prices are going to go up. I think what we'll see before then is some demand destruction, meaning as when the prices of any good or service rises dramatically, both consumers and businesses tend to cut back on their purchases, and you see the prices come down. As far as a solution, there are really only two solutions. In the short term, the only solution is for the Fed to dramatically increase interest rates and or for the U.S. Treasury to do something to halt the decline in the dollar. Whether we're going to see that or not, I really don't know. Longer term, the solution is to find alternative sources of energy as well as technological improvements to get better crop yields for corn, wheat, all types of grains. Those are the long-term solutions. But the only solution in the interim is to raise rates to try to halt the dollar's decline.
Now, obviously, an individual investor can choose to stay in cash and avoid the markets, but if an investor decides to stay in the market, is there a good way to invest now?
Oh, absolutely. There's always ways to make money in the markets. The only type of a market environment that I don't care for is when you see this sideways type of market. It's very difficult in that market. There are some ways, but it's a little tougher. But if we have stock prices or commodity prices, whatever type of investment vehicle it is, that's trending significantly either up or down, there's always ways to make money. So I couldn't care less which way stocks go, up a lot higher or down a lot lower. Yes, there are ways to make money.
For those who do not know, what is an ETF exactly?
An ETF stands for Exchange Traded Fund. And in simple terms, an exchange traded fund, or ETF, is nothing more than a mutual fund that one can trade like a stock anytime during the trading day.
Why should someone subscribe to the ETF Strategist?
Well, I think the biggest reason that someone should subscribe to the ETF Strategist is our focus is to make money for our subscribers, whether stock prices in general are going higher or lower. We've fortunately been quite successful at that. For example, since the inception of our investment newsletter last September, the S&P 500 index, including dividends, has fallen 12%. Yet our aggressive portfolio is up 10.8% during this period. So we've actually done what we've set out to do, to make money for our subscribers regardless of what's happening in the overall financial markets.
Thank you very much, David Frazier. David, in case you didn't know, has over 20 years of experience in the financial markets. And to get the ETF Strategist and free investment reports, click on the link on your Newsmax TV page. I'm Ashley Martella for Newsmax TV Money.